This is Sharon Vornholt with another episode of Makeover Monday Baby Steps to Success. And today I wanted to talk about one of the three main real estate investing strategies, which is buy and hold, and those folks are otherwise known as landlords. Now, this has long been known to be the path to wealth over time. It's what I like to call the get rich slow plan. But make no mistake, it is a way to accumulate wealth and to have other people to buy those assets for you. Now, what I mean by that is it is one of the real estate investing strategies where you make passive income. So you buy the property, oftentimes with little money down. Sometimes you'll need to make a down payment. But in return, you get ownership of an asset that is going to grow in value over time if you have bought this asset correctly. It's important that you buy the property in a good neighborhood. Doesn't have to be a fancy neighborhood, but it should be in an area that's appreciating. It should be in an area where I like to say there's a mix of homeowners and rental property. I personally don't think areas that have all rental property are the best areas to buy investment property in because they tend to go down in value over time. And you're looking at holding an asset at least 20 or 25 years in most cases, getting it paid off so that you have something that will cash flow for you. Now, the ability to use this type of leverage, in other words, to put only a small amount down and to one day own an asset that is worth a great deal of money, is just a phenomenal way to grow your wealth. You know, you have security in the fact that your asset is being paid for by someone else, and if it's not generally going to go down in value if you bought it in the right neighborhood. Along the way, you can also get great tax benefits. Every year, your CPA or your accountant is going to put the benefits of owning this property down on paper for you, and it's going to mean that you're going to have more money in your pocket. Now, real estate investing by being a landlord, by owning property, is known as a passive income strategy. This is an important distinction because if you go to your job and you earn a paycheck, this is also true with wholesalers and rehabbers. That is known as active income, and you're going to have regular income taxes taken out on that. But with passive income strategies, they fall into different guidelines. So the tax ramifications are much more favorable for landlords and buy and hold investors. And the last thing that you really need to think about is creating a plan. Now, let's say that you want to have $10,000 a month in income when you retire. When you're purchasing these properties, you need to be looking at what they're going to be cash flowing at down the road. And this is where buying in the right neighborhood is so vital. Let's say you have 10 properties and each of them happen to be in a great neighborhood, and you estimate that even though you're getting $850 a month in rent now, you're going to be getting $1,000 years down the road. Once you have those properties paid off, you only need 10 properties earning you $1,000 a month to have $10,000 in passive income. So this is an individual decision for people. You and you alone get to decide how many properties would it take for me to have the kind of lifestyle I would like to have down the road. If you get those properties paid off sooner, maybe by wholesaling and earning chunks of cash where you can pay those properties off more quickly, you can be looking at a retirement much sooner than at age 65. So there's a definite planning process to this. Figure out how much money you want as your passive income and work backwards, and then buy those types of properties that will generate that type of income down the road. Now, another way you can do this is if you decide I need 10 paid off properties earning me $900 to $1,000 a month, you can buy 20 properties, have your tenants paying those properties off, and then sell 10 of the properties, put all that cash, roll that over into paying off your 10 that you want to keep. And that's another way that you can get those properties paid off more quickly. But it's something to think about. If you don't want to be a landlord, you can buy the properties with enough cash flow to hire a management company. So that's definitely a topic for another post. But this is Sharon Vornholt again with another Makeover Monday, and we'll be back to go into detail on all of these things that we're talking about in future episodes. Thanks for stopping by.